What's up, everybody? Welcome to another episode of the Big Stud Podcast, where I try to bring you people who have accomplished major things. We have other segments every week with Mike's Monday Motivation and Ask Mike Anything, which has been a lot of fun to engage more with you guys as the audience. So as always, if you have questions you want me to answer on the podcast, shoot them over to me, like shoot me a DM, shoot an email over to mike@bigstudpod.com and allow me to engage with you guys to the best of my ability with trying to stay relevant with what's going on in the world. And like the last 18 months has been its own whirlwind of what is or is not happening, what you should or should not be doing. Specifically, more recently with the Silicon Valley Bank, what should you do with your money is kind of a big question right now. And where is it safe and where is it not safe? And what risk are you willing to take? So today's guest is another one of those. This is the first time we've ever spoken. I enjoy interviewing people I don't really know that well. Again, I've told you this, but in the past, as my audience, it allows me to work on my interviewing skills, allows me to learn, research, and understand people without having a backstory. And that allows me to have to listen to hear, not listen to respond, because I don't know what he's going to say. But this person, somebody I got referred to by somebody I got referred to that I respect a lot. And I am excited to see what his perspective is on kind of the state of the union, as well as, his investing strategy and portfolio. So welcome, Jess Reed, to the Big Stud Podcast, man. Thanks for being here.
Mike, thanks for having me, man. Happy to be here. I'm excited.
So obviously we have some mutual connections. We have some people that we know mutually, but, obviously you've found a success specifically in the commercial real estate investing to the point where now you teach other people how to do that, right? So you had your journey of a partner in the Cash Flow to Freedom Academy that allows people to kind of learn whether they're novice, experienced, or seasoned. But where did you start? How did you decide commercial real estate was your outlet?
Sure. Yeah, it's a good question. I mean, I started, I live in Nashville, first of all, and I've been here since I graduated from college. And when I got here, within about a year, I was actually in door-to-door sales. So I was in the alarm business, right? Home security business, and did that door-to-door for about 4 years, and certainly learned a lot about sales and just dealing with people. And then from there in 2012, I got my license as a real estate agent, right? And I'm still a licensed agent. I refer out all of that business now, but it was just essentially a higher ticket item than the alarms. And so pretty soon after getting my license, I was kind of looking around and looking at all the top producers in my area. And, a lot of the folks were in their 50s and 60s. And they were doing open houses on Saturdays and Sundays, and still very much trading time for money. And I realized pretty quickly, if I don't sell another house, I don't have another commission check. And so the idea of real estate investing was pretty close by, being that I was already, in the real estate space. And so that's kind of where it started. I started buying single family homes. I bought a house for personal use that I had roommates that were paying the mortgage. So I was essentially living rent free at that point. And, my first property that I bought was just under $60,000. It was down in Muscle Shoals, Alabama. And it produced enough cash flow to pay a couple of utility bills. And so I started thinking, I had this kind of light bulb moment. It's if I can just stack a couple of these, over the next couple of years, I can have all of my bills paid for via passive income, via cash flow from these properties. And at that point, I was like, wow, I don't have to necessarily worry about another commission check. I wasn't trying to get out of real estate, but I wanted to get to a place in life where I didn't have to think about money all the time and think about the next deal and what I was going to do with that commission check. I just wanted to, sort of remove the thoughts around money out of my everyday life. That was really the genesis of it.
So I want to unpack something for a second, because I think this is kind of one of those trigger words right now, but passive income, right?
Sure.
I don't think that you're sitting around on your couch and checks are just getting handed to you month after month. There's work that goes into this, just like anything that is worth something. So what's the real story behind passive income? How much is it passive? How how much time is invested? Like, how are you measuring your time exchange for dollars? Because obviously it's a lot more front heavy, specifically on the commercial side, right? But in general, like, you didn't start out passively just collecting checks. There's effort that has to be put into that. So what does that look like on the front end to really create some momentum that's meaningful, at least in your definition?
Yeah, that's good. I mean, I think, when I started out in the investing space, again, it was the single family homes. And, I was the person that was getting the phone calls when the toilet broke or when there was a water leak or, pick your poison, right? And so that is, you're essentially then having to jump back into all of these properties and you're trading time, right? And not only that, but when you have these expenses, that eats into your cash flow really, really quickly, right? And so you can be at a net zero on the year just out of having to replace an AC unit on a single family home, right? And so I did enough of that to kind of start to see, okay, this isn't really what I'm picturing this to look like. So I got property management, right? And it was worth paying them the fee to sort of take over. But even then, you're still the ultimate decision maker. They're still coming to you and getting the approvals and all that sort of stuff. So you're still, a bit tied up in those deals. And so for me, when I got into the commercial space specifically, we look for triple net leases and absolute net leases. And so what that means is a triple net lease, the only thing that we're responsible for is the roof in the parking lot, right? So that then takes away a lot of that day-to-day maintenance and sort of question marks that can come in with other lease structures. And then an absolute net lease is just one better. We're not responsible for the roof or the parking lot. So on the front end, as you said, there is some work and some due diligence and sort of figuring out, okay, what's the shape of the roof? How's the parking lot look? Some of those factors. But then once we've got all that tied down, once we close on the property and, we've got a 10-year, 12-year lease in place, it's as passive as it can be, right? I mean, to your point, there's still some things that have to be done. Certainly, we got to reconcile with bookkeepers and CPAs that time of year, all that sort of stuff. But from a day-to-day standpoint, a triple net lease or an absolute net lease in the commercial space, in my opinion, is about as passive as you can get. But nothing, to your point, is 100% passive ever. And people that say that, like you said, they're just sort of using the buzzwords to get people's attention.
Well, and I just think there's so much online personas talking about how easy it is to get wealthy, and not that it's hard. It's just not complicated. It's simple, but not easy, right?
100%.
And I think that's where, like, a lot of people they misinterpret the words to meaning that it's going to be easy. It's not easy, but it's also not complex. It's not complicated. Like, once you understand the formula, right? Like, you probably had your residential real estate formulas that made sense on properties. You learn the formulas on the commercial, which is how you knew triple net and absolute leases was the way you wanted to go, right? You learn that either hopefully the easy way, but sometimes you learn that the hard way, right?
Yep.
But ultimately it's like, it's simple but hard. Because there's still, especially in that commercial world, there's a lot more like deal making, right? In the residential world, it's not as much of a negotiation as it is in the commercial world. So, like, for me, like, 'cause I was in hard money for a little while, did a little bit of commercial, but mostly residential. But in that hard money space too, you're coming to like terms, right? It's a negotiation. We all want to win a little bit, but we all want to win just enough that, like, we don't feel like we're taking advantage or we're taking advantage of anybody else, right? And so once you figure out the formula that tends to work, it's just finding the right properties, right? Finding the right opportunities, finding the right, renters, whether that's residential or commercial, because a bad renter can be worse than a bad property 100% of the time.
Absolutely. Again, we experienced all that in the single family space, right? And so, in the commercial, at least what we've found is you kind of remove the emotion out of those deals, right? I mean, you're essentially buying businesses, right? I mean, we buy properties that have leases that are, 10, 15 years. And so, these businesses have customers coming in and out. They don't want to trash the place, right? It's not like an Airbnb where you've got, the bachelorette groups coming in every weekend and just going nuts, and you have no idea what your place is going to look like come Monday morning, right? So it's just a totally different sort of headspace between, the single family world and the commercial space. But to your point, it's definitely not easy. If it was, everybody would be wealthy, right? It is very simple though. I mean, it's
Yeah.
way simpler than some of the stuff that I learned in college that I have no use for now, right?
Yeah.
I mean, I wish I had learned this stuff in college. That's why we started teaching about it, because we think it's important. And we think, that if people can just grasp some of these basics, they can accomplish a lot in a fairly short amount of time versus some of the stuff that we're learning in school these days. But that's another subject.
So look, I mean, obviously you took, if you can do door-to-door sales, you can sell just
Yeah,
about anything, right? And so you just,
yeah,
what you kept doing was like, you were just a salesman trying to find bigger meat on the bone, right? What,
yeah,
what was your journey from residential to commercial? Because I feel like that's a really big step. There's a lot more unknowns, a
yeah.
lot more legal terms, longer leases, right? So there's a lot more to it. What was that journey for you? Were you nerve-wracked? Did you have a partner? Like, how did you start that process and getting into, like, we'll just say, the first commercial deal you got involved in?
Yeah. So fortunately, my partner Ryan, who's partners with me on Cash Flow to Freedom Academy, his background was in the mortgage industry. So that's a big bonus there. He's used to looking at deals all the time, underwriting deals, things like that. But he was a step or two ahead of me in the commercial space. So he and I, our relationship goes back a long way, because I was doing residential as an agent, and he was a lender. So we did a lot of deals in that sense, and we would talk investing and things like that. And around maybe 2017 or so, he had done a couple of commercial deals, and again, sort of just put pen to paper and sort of explain pros and cons of what I was doing versus the commercial space. And once I kind of grasped what was possible in the commercial space, it was full on. And so we ended up partnering on a deal. We bought an apartment complex in Clarksville, Tennessee. That was our first deal together. And so we were able to sort of tackle it together. But I had him as a partner, and he was able to sort of pave the way a little bit for me, just because he had already done maybe 3 or 4 commercial deals prior to us doing that deal together. So that was definitely helpful, and something that I certainly recommend to a lot of folks. If you've got the opportunity to partner with somebody that knows what they're doing, right? We're not trying to reinvent the wheel here with this or anything else. It's like, find somebody that knows what they're doing and take that as an opportunity to really sink your teeth in and learn as much as you can, because it's going to pay you tenfold, and it's going to speed things up a lot more as well by potentially partnering with somebody in that space.
I mean, speed things up, but also like substantially reduce mistakes that can cost you
Yeah,
bankruptcy. I mean, like,
100%.
so this is more of a personal question. I'm kind of curious. And so in your approach, maybe the approach that you teach, I mean, obviously there's like a local commercial approach, right? But if you live in, like, I used to live in Charlotte, live in Greenville now, like Charlotte, like real estate's a wild market, right? And not
Yeah,
not not
yeah.
all, because it's saturated with people that are trying to do these things. Not all deals are good locally. So what's your approach to like local versus not local versus like understanding different markets, understanding different environments? Like, did you just get into a specific type of
Yeah,
commercial real estate, or like how did you go through that? Okay, we got one. Whew, where do we go from here? Because there's local, there's
yeah,
different, what I call verticals within that space, right? There's medical, there's professional, there's industrial, there's all those different variables to that space.
yeah,
But
yeah,
like, so how do you start the progress of scaling kind of what you've done and how you help people do that?
yeah. So a couple of things. I mean, number one, I'm in Nashville. Ryan sort of splits his time here in Colorado and Texas, and we don't actually own any assets here in Nashville. I mean, the Nashville market is absolutely crazy. The cap rates just don't make sense for what we're doing, and so it. I say that to say, people that are looking to get started, it doesn't have to be a deal that's right in your backyard. Again, with the proper lease structure, you're not having to go buy the property once a week, once a month, right? I mean, we check on our properties a few times a year.
Yep.
So that allows us to branch out a bit more. So we do a lot in Texas, Georgia, Indiana, Florida. So it's kind of all over the Southeast, and then Texas as well. But everything is kind of east of the Mississippi. But we look at the big markets. We look at in Indianapolis, say, or a Charleston, whatever, and we kind of go out maybe 30, 45 minutes into those tertiary markets. So those markets where, you've got enough action sort of pulling off of the big city, but you're in a smaller market where you're hopefully going to find some more aggressive cap rates, where you can make a little more money, right? And when we're syndicating deals, we're bringing on other investors. That means there's just got to be that much more meat on the bone to obviously make our investors their money and their returns, and then have a little bit left over that Ryan and I get a little win as well. And so that sort of is how we look at our deals. We're not bound to any specific area, but we do, sort of like those tertiary markets that are still in the path of progress. You're still seeing the demographics are improving. People are moving there. It's not a dying city by any means. There's enough going on from these other major cities close by where it makes sense, and you're seeing good growth in those smaller markets. That's how we've done it up to this point. For the most part.
Real quick, for any of the novices that might be listening, what is a cap rate?
Yeah, so the cap rate is basically just if you were to pay cash on a property, right, and you look at the net operating income, that is the cap rate is the net operating income divided by what you're going to pay for the property. And so again, in the Nashville market, these huge hedge funds are buying properties at 3, 4, 5% cap rates. And for what we do, you can't make any money on those. So we look at, honestly, like 8% plus cap rates is where we kind of start to where it makes sense for what we're doing.
No, I knew somebody was going like, what does he mean by a cap rate? It's easy to get lost in like what we talk about every day. So sure. You talked about syndication, kind of go through the journey of like somebody starting to somebody seasoned like you, right? So somebody starting isn't going to be able to go syndicate fundraising to do a project like this, I would assume, right? Mm-hmm. So how do you suggest, or how do you teach, or how did you get the momentum of the win started? And like, was it just low? Like I think you said apartment complexes, so it was just lower dollar figures. Is it bankable for most people? Is it something where they need to go get more private funding? Like, what's the first step for someone to go get, realistically one of the biggest purchases of their life? Because it's likely going to be more than their primary home, typically, not always, but typically. So what does that process look like to get started and even being able to approach a project like that?
Yeah. So when we first started, we looked at our sphere of influence, right? Again, Ryan, his background in the mortgage business, my background in real estate, so we were already, sort of in the real estate world. So that lended a good bit of trust from people that knew us and sort of knew what we were embarking on. But, our first deal, we had maybe 4 or 5 investors on that deal. It wasn't a large deal. It was under $1 million deal. We put in some cash. My wife and I, we had some money sitting on the sidelines that we were wanting to put to work. And then there was a little bit of a gap that we needed filling. And so we brought on just a couple of close friends, honestly. And again, we outlined the deal, here's the game plan. Here's how long the lease is. We're going to hopefully sell it in 4 to 5 years, move into a bigger asset. Cash flow is going to be this. We're going to give you a preferred rate of return, plus we're going to give you equity in the deal. So the investors were making, close to 10% on their money year one on the deal. And then again, with what's great with real estate, specifically commercial real estate, the tax benefits are incredible, right? So you got depreciation that you can write off, and you front load that with a cost segregation study. Well, you can now basically wipe out all the tax that's due on any income. So when you're telling an investor it's a 9.25% return year one, and then you've got enough depreciation to offset that income, you don't owe any tax. So it's a true 9.25% versus, if you're putting that in the stock market or something else and they tell you it's 9%, well, yeah, then you're paying 35% in taxes. Then you're paying your management fee. What are you left with? Right. Yeah. So, for me, Ryan and I always say, we've got a friend of ours that says I'm investment agnostic, right? Show me something better and I'm all for it. But I have yet to see anything that continues to win time and time again, appreciates the tax benefits, the cash flow while you wait, all these things that real estate, offers. it's tough to beat, in my opinion.
And so I assume these are all things you teach in your academy, right? For somebody who's listening, maybe want to
100%.
like get deeper into like what you just said is
100%.
like is absolute like another language to a lot of people, right? So I assume inside your academy that's something you guys work on.
Absolutely. Yeah, we go A to Z on all that stuff. Yep.
Amazing. So I want to pivot real quick because like the majority of my audience are entrepreneurs. And from the outside looking in, it looks like you've done two things really well that I think a lot of people struggle with. The first is working with a partner at the level that you're doing it at. Like you've been partnered with the same individual for, I mean, at this point, almost 10 years, right? Obviously, you had a working relationship as two separate vendors with one client before you got into partnership. What do you think you guys have done differently or better, or why do you feel like your partnership has sustained the time? Because, you know, partnerships are one of those things that like most people don't have success with. But it seems like you guys have done multiple things from investing to now coaching and mentoring to I'm sure other things that are going on. What makes your approach or why do you and Ryan work so well together? Or how have you guys kind of beat the odds from a partnership perspective?
Yeah, man. You know, I think honestly, we've gotten lucky because I agree it doesn't happen that often. But a couple of things. Number one, we left our egos at the door. You know, neither one of us are. You know, we just get along really well, and we recognize each other's strengths and weaknesses, and we just play off of those. And we both kept the main thing. Like we both started in this to get full control of our time, right? We wanted to have all the time that we wanted with our families. And Ryan's got 2 kids and 1 on the way. I've got a family. I've got a little girl. And that's the main thing, right? That's why we started building what we've built. And so anytime something comes up, if it's in conflict with keeping that the main thing, then both of us recognize, listen, you got to go do this, or you got to go do this. Like, we don't have any issues when it comes to that because we both got into this for the exact same reason, and we've kept that the number one priority. And so I think that has really been the biggest sort of advantage that we've had. We're not, you know, I'm not wanting to go build some massive thing and he's not wanting to do this, or vice versa. Like, we are very synergized with what we want to do. And while we want to grow this coaching platform, quite honestly, like, you and I both know a ton of people that are crushing it in all these different spaces. And, you know, sometimes you get online, you get on Instagram, you're like, oh, wow, I could be doing so much more. And yes, that's true, but that doesn't mean it's the right answer for what we want with our lives, right? And so we have to, you know, make sure we don't fall into that trap of just copying what somebody else is doing, you know. So, you know, we want to continue to grow and continue to be a service to people, but we also don't want to sacrifice the whole reason that we got into this in the first place, which was to have control of our time and be able to be with our families as much as we want.
Well, that was actually a great bridge to the second point I was going to bring up. Is it does look like you've done a great job. I mean, you don't have a giant social media presence, right?
Yeah,
but there's enough there to show that like you do prioritize family, you do prioritize being a father, you do prioritize being a husband. And so you kind of answered the question already. Basically, it was part of your business model was to make sure that you don't lose those things. But how do you integrate the time? Is it like, do you time block? Do you like have certain like, or is it you just have a really good amount of free time that you're able to just balance it all, you know, independently? Like, how do you make sure that your vision of success maintains the way where you want it to be? How are you measuring that, or how are you analyzing that?
Yeah, man. I mean, I do. You know, I mean, quite honestly, I don't take meetings before noon, right? I mean, because that's workout time. That's time with my family in the mornings. We have breakfast together every morning. We have lunch together. All these things, right? And then in the afternoons, I have a hard stop at 5 o'clock as well, because again, we have dinner together. Those are non-negotiable things, right? And so, but there is certainly enough free time in there where, you know, again, for me, it's just being able to keep my eyes open and ears open to new opportunities, and being sort of open-handed, and again, coming on podcasts like this, and just wanting to, you know, talk about real estate as much as possible, while at the same time, you know, not spending 8 hours a day on Instagram or social media, you know, sort of trying to find that happy space.
Well, I mean, you said it best. I mean, it can be that place that just devalues everything you're doing, because there's always more, there's always something else, there's always somebody promoting the next best thing, right? And
Yeah.
the problem is you never see the story 12, 18 months later when that thing flopped, right? They come on and sell you the dream, but they don't ever come back and tell you it was a nightmare, right? So you don't get that side of the story over time. You know, I can think of a specific scenario right now, but I mean, like, let's just look at Silicon Valley Bank right now. I mean, it's obviously a very real situation right now, right? And like, that being a, you know, the entity that it is, it becomes public knowledge, but that level of failure is not uncommon in business. It's just uncommon in that industry at the level that it is, you know. So, you know, it's easy for social media to kind of pull you away from it. But I mean, let's, if you don't mind talking about that for a little bit. I mean, obviously, you know, that piques some ears, right? It gets some people's attention that, you know, anytime a major institution like that fails, quote unquote, you know, obviously the speed of information, I think, in today's environment allowed, you know, their investors to understand what was going on a lot faster than I think they would have even just 10 years ago. But I mean, you don't strike me as somebody that's just like stacking cash in the bank, right? So, you know, there's some of that, but obviously you're investing it into more hard assets. So, you know, what's your perspective on where we're going next? Like, where should somebody be looking to, you know, should it be more, you know, debt reduction? Should it be more hard asset acquisition? Is it, you know, get yourself a rainy day fund because a rainy day might be coming? Like, what's your perspective on kind of what's going on in the marketplace right now?
Sure. I mean, for me, you know, the only reason that I'm going to, you know, stack and sit on a bunch of cash in the bank is because I'm waiting for an opportunity to buy real estate with it. Right. I'm not stacking it just so that I can log onto my banking app and get a dopamine hit from seeing a bunch of cash sitting in the bank. Right. That does me no good. But I do think there's a time and place and a season to stack it, you know, when you know that there's some good deals coming down the pipeline. Right. And again, you know, even now with interest rates being higher, you know, typically in the commercial space, a lot of these loans are 5-7 year loans, right? And so, you know, you look at some of these loans that were written maybe, again, 5 years ago, they're coming up for renewals this year. And a lot of folks buy deals that they shouldn't buy, right? And you know, now that the interest rates are maybe double what they were when they bought the deal that they shouldn't have bought in the first place 5 years ago, when those come up, you know, they're gonna be dumping those assets, right? And so, you know, I do think that this year we'll have some good looks at some good deals, and I think we are just now kind of starting to see the sellers of these assets starting to come down a little bit on their price points because they're seeing where interest rates are, and folks aren't biting, and so they're starting to adjust some prices, which in the long run are going to help us, right? So we'll be able to pick off a couple of these assets at an adjusted sales price. Yes, it's at a higher interest rate, but if interest rates are coming back down in the next 12, 18, 24 months, we'll refi those properties, we'll refinance them at a lower interest rate, and then it's an even better deal at that point. And so, you know, again, coming back around, no, I don't stack cash just to stack it. If I'm stacking it, it's to go buy real estate. Again, you know, I think owning a physical asset that I can go see, I can depreciate it, it can produce cash flow, all those things. I've got a little more control over just you know, the stock market and things like that. That's not who I am. I know obviously a lot of people, I'm sure you do as well, that have made lots of money in the stock market, but I've known a lot of people that have lost way more in the stock market than in real estate. And if you know how to buy right, and if you know how to properly analyze a deal, in my opinion, you've got a better shot with the real estate. But you know, this SVB stuff, I mean, listen, at the end of the day, you know, people saying, well, you know, my money's coming in from cash flow on these assets. I mean, if things got really, 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 really bad, those tenants ain't gonna be paying their rent.
No,
right?
For sure.
So if at some point, if it got bad enough, we're all gonna be impacted at some point. So, you know, the top level stuff, I don't pay that much attention to it. You know, my bank here is fine, and the banks that we work with, you know, we're insulated at this point. So, you know, I kind of look at that as a bit of an isolated event. Obviously, it's affected, you know, a lot of things, but you know, in the grand scheme of things, could be a lot worse. So we'll see.
I've been saying for a long time that, like, in every season, somebody's still winning, right? Like there's somebody is, right? And you know, in these scenarios, and this is not about putting anybody individual on a pedestal, but there's certain people that are going to be impacted more than others. That's just a fact, right?
Yeah.
And like, if you're worried about your commercial properties and the businesses, like, we got a bigger issue at hand than just your cash flow concerns, right? Like, we have
100%.
bigger, we have bigger concerns as a community when,
Yeah, exactly.
like, beyond a certain point, when those people start losing, like,
Exactly.
I'm like trying to figure out how to feed my kids, not like understand what my retention rate is in my business, right?
Yeah. Yeah. And
Yeah,
that
but
just goes back to just having proper perspective with some of this stuff, you know.
it's
It's
also
like,
like understanding how to pivot. I think a lot of people struggle with pivoting,
yeah.
understanding
Yeah,
how to
100%.
diversify at the right time, or how to, like, hey, that was a good idea yesterday, but today it's not. Right. Some of those, like you're talking about, those bad deals that people bought, well, like, we'll refinance when rates come down. We'll look at you now, right? Like,
Yeah,
you can't
exactly.
fall in love with the potential of something. You have to look at the facts of something. And I think people get
Yeah.
so emotionally attached to certain outcomes that they allow emotion to outweigh logic. And that's when people really get hurt, which is probably what happened at SVB, right? They overstretched
Yeah.
themselves. They over leveraged themselves. They thought they'd be able to quickly sell some stuff off to get some cash back. And then that plummeted. The bottom fell out, right?
Exactly.
And so,
Yeah. Yeah. And there'll be people that buy real estate deals, you know, on the assumption that rates are going to come back down. And when they do, we're going to be in a better spot. But, you know, if the deal doesn't work right now, today, then forget it. You know, we're not touching it.
well, but like you said, you're buying businesses, like, and that's your
Yeah.
approach to it, right? Like, the P&L has to make sense for the deal to make sense. And I'm sure you have your thresholds on obviously cap rate's one of them, but like, you have your thresholds that like automatically qualifies things out. And I think it's learning those things. So if you're listening right now and like, reach out, man, like, reach out to this guy, get into his academy. You know, don't make the stupid mistake on your own. It'd be a lot less expensive. I don't even know what he charges for his academy, but I guarantee it's less expensive than the mistake you're going to learn on your own. And he's got hundreds of lessons to give you that you don't have to learn the hard way on your own. So, no,
Yeah.
I'm sure you wish you had 10 years ago, right? Like,
I mean, of course, you know, I mean, again, that's why we do it. Cause it's like, you know, gosh, it took us years and years and tons of mistakes to learn this stuff. And even just to build our team around us, right? From brokers to CPA attorneys, asset protection attorneys, all these different pieces that you really need. I'm not going to go learn some of this stuff on. I don't want to. Just let me find somebody that knows what they're doing and let me bring them into the fold here. And so just from that standpoint, assimilating what we call that dream team, you know, if you're doing it by yourself, it takes a ton of time and a lot of trial and error just to build that roster.
well, Jess, if somebody's interested in like connecting with you and want to learn more, what's the best way for them to connect with you to better understand about your academy or better understand how they can get, engaged with what you got going on?
Yeah, so check out our Instagram is Cashflow to Freedom Academy. And then our website is cashflowtofreedomacademy.com. You can drop us a message on either one of those. There's a bit more detail on the courses and some of the coaching that we offer on the website. But, you know, for a quick introduction, shoot us a message on Instagram and we'll take it from there for sure.
Well, Jess, I really appreciate your time today, man. Like, I think you dropped some valuable nuggets for people to start taking some action on who might be considering that commercial real estate avenue in their portfolio. And I think, like, I'm a coach, right? So like, I'm all about supporting good coaches who actually bring value to people. There's plenty out there that don't.
Yeah.
And if you are listening now and you're one of those coaches who don't bring value, you don't bring value. You didn't need me to tell you that. So don't come yelling at me because I'm right. But ultimately, I appreciate the support that you're bringing, your niche audience, and ultimately, cash flow to freedom, right? That's the concept, is helping these people develop some time freedom that can be with their families for breakfast, lunch, and dinner every day that I'm sure many people are wishing that they could. So
yeah, man. Yeah, I appreciate you having me on. I really do. Thanks for your time.
Well, guys, reach out to him, connect with him on Instagram, or reach out to his website. Jess, thank you so much for your time, man.
All right, man. Cheers.